Hello and welcome back to the Rekt Capital channel, and welcome to today's video update about Bitcoin. We're going to be looking at whether this Bitcoin price action is normal in the grander scale of Bitcoin's history. Let's dive right into the video episode. I hope you're having a fantastic day today. 9,650 is of course a very important reference point for price for directional bias. If Bitcoin breaks above this level, then we can be considered to be bullish. If it rejects from there, we can consider price to be bearish. And every time we've seen a rejection from here, indeed a mean reversion in Bitcoin's price action had occurred, and the same thing over here. Rejections are in red and failed retest attempts in purple are also the technical signs that we can consider to be bearish as well, because every time we've seen a bearish or at least a failed retest attempt, Bitcoin has retraced further towards the downside as well in each of these cases right over here. So bearish trend reversals, historically speaking, have occurred every time we've seen a rejection from 9,650 or a failed retest from here. And in the past 5 weeks in Bitcoin's price action, we've seen both of those things happen. We've seen a rejection from 9,650 a few weeks back, and most recently we've seen a failed retest attempt where Bitcoin couldn't claim this level as a new support. But the thing is, every time we've seen a failed retest or a rejection, we've seen a retrace. Whereas in this case, Bitcoin has retraced as far as 8,700. So what we need to bear in mind is that Bitcoin is in a 8,700 to 9,700 range. So it's a $1,000 range at the moment. And really, we shouldn't be getting overly bullish until this level is confirmed to have broken down from. And we shouldn't really be getting overly bullish should this level continue to figure as a resistance. So a break past this level, we can be a little bit more bullish. A break down from this level, 8,700, and we can consider price to be bearish. But let's zoom in here to the daily just to give you an idea as to what psychology is dominant in the market at the moment. This is a previous breakout pattern for Bitcoin. This was a flagging structure that resolved itself with a nice breakout towards the upside, which was entirely cancelled out shortly thereafter. But the main thing that I want to point out to you guys is that since April 30th, Bitcoin has been printing a series of higher lows, and this higher low right over here is still being respected. What's the psychology of this higher low? That Bitcoin buyers, investors, are happy to be buying Bitcoin at higher and higher levels on pullbacks. So essentially, investors and traders are buying Bitcoin on the dip. They are buying the dip. So this higher low right over here has to continue to hold for that psychology to remain true going forward. And that's a psychology that tends to accompany bullish price action. So we really need to see this trend line continue to hold for that psychology to remain true going forward. So going back to that whole idea of the Bitcoin range here on the weekly time frame, how does that tie in with the halvings? Because of course you can see clearly over here 8,700 is the range bottom and 8,000 or at least 9,700 is the range top, and we're just seeing a retrace from the range high at the moment. And what we need to bear in mind here is that this was a nasty weekly close over here because it was a fake out. This was a positive confirmation that we could be breaking out from this range, but we didn't get a retest attempt over here. So I'm sure that many people FOMO'd here, as you can see, but we're really just in this range. For 7 weeks, we have been just consolidating within this range. And what we have to bear in mind when considering previous halvings is that the immediate aftermath of halving 1 saw many weeks of sideways movement before exponential upside. What happened immediately after halving 2 was very much the same, although we did see a few weeks of retracing. And the whole thing here is that we have to just showcase and have some patience. Even though Bitcoin has been in this range for 7 weeks, it's been in this range for 5 weeks after the halving. And what we have to bear in mind when saying that is that Bitcoin after halving 1 took 8 weeks to break out into a new bull trend, and after halving 2 it took 12 weeks to break out into a new bull trend. So if Bitcoin is going to continue to consolidate, it would consolidate for a few more weeks within this range. But if we are to resolve this range with a breakout into a new bull trend, this would be the range to do that from. This would be the range for Bitcoin to break out from and resume or at least start a new bull trend. And at the moment, given what we're seeing in Bitcoin's price action, that volatility, we're seeing altcoins actually lose a lot of their valuation and go into Bitcoin. So this is a tendency that I mapped out, or at least not a tendency, a pathway that I mapped out on May 28th, that we're just going to see a rejection from this red box over here and a return towards the macro bottom of this black triangle before rebounding and finally reaching this red box once again. And since May 28th, we've indeed followed through on the majority of this pathway. We've reached the bottom of this macro triangle, consolidated around this region for a while, and it looks like Bitcoin wants to flick up from the bottom of this macro triangle so as to return towards this region right over here. And this only just ties in with the fact that we could potentially see altcoins lose a lot of their valuations going forward. So a potential trend reversal in Bitcoin dominance is on the horizon. It does look like this is indeed the case with this U-shaped reversal right over here, and you can see these sort of reversals in the past as well. So we are seeing a lot of those signs really shaping up for that movement of capital into Bitcoin, but predominantly away from altcoins. Whatever the directional bias for Bitcoin is going to be, we're seeing that capital already start to move away from altcoins. And this ties in with the fact that we are finishing up with this Q2 hype cycle. Of course, there are still going to be a few altcoin plays that you can make in the space. We're not quite done with the altcoin hype cycle at the moment, but we are definitely reaching that end point. We are definitely coming to a close when it comes to that hype cycle. And this chart just showcases how we should be behaving with altcoins at this time. We have to really time our altcoin exposure. We have to measure those position sizes accordingly and have enough allocation in Bitcoin and fiat to just balance out our portfolio so as to not have too much exposure to altcoins at this time, but also not to be too overly diversified in the altcoin exposure that we already have. And this is the sort of stuff that I talk about in my risk management course, which is now available for a giveaway, which is sponsored by eToro. So definitely check out the instructions here on the screen. But for now, this is just for US citizens, so feel free to make the most of it. Only 5 giveaways of this risk management course where I talk about profit, diversification, I talk about risk management, and how to structure your portfolio, how to profit circulate, how to manage your profits, how to deduce a profit taking strategy, and so much more. So very excited to be giving this away, and I want to thank eToro for making this possible. And having said that, that's just about it for today's episode. Please consider dropping a like if you liked the video, and of course subscribe for more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak soon.